Okay, we are live. We're pulling a reverse Tanner today and going live early. So 30 seconds early, Roy. How do you feel about that?
Feeling good. By the way, I got a late meeting, guys, so we're gonna make sure that we wrap up within an hour and a half. As always, if you're new to Bootleg Weekly, we have a curated list of topics, but towards the end, we'll get to your questions and answers. It's always rapid fire, but rapid fire sometimes means 10 minutes. This time, it probably means rapid fire. It's also why I'm a bit grainy as well, and probably the sound quality is not as good, but you can do what you got to do, right, Tevis?
That's correct. Wow, Not a Lurker is here. That is, I haven't heard from Not a Lurker in quite a long time, so that's good to see.
Yeah, he's alive.
He is alive.
I was afraid that he was short some of the quantum stocks, in which case he may not be alive. So,
yeah, Not a Lurker is just the hyper liquid whale that's going short Bitcoin.
Maybe it was a guy that actually ended up doing the insider trading thing with Bitcoin short at the right time.
Oh man, we have so much to talk about. Okay, where, Roy, would we like to start?
Let's maybe start on like the tariff stuff. I think that's probably the proper place to frame everything. And I've got a few links here that I think we'll go through. Yes.
We'll get to the soybeans eventually. But yeah, let's do it chronologically.
All right, soybeans it is. Sam posted this, and of course there's an instant reaction repost from Truth Social where Donald Trump says, I believe, well, I guess to frame it, yesterday China basically said, we're going to fight and not like literally warfare, but that they were not just like, oh, everything's great between us, we're all good buddies, like Donald Trump's tweet over the weekend ended up intimating. So of course we knew we were not out of the woods, even though we had a Green Monday. But nevertheless, so that was a big pullback yesterday. Today is, he said, I believe that China purposely not buying our soybeans and causing difficulty for our soybean farmers is an economically hostile act. We are considering terminating business with China having to do with cooking oil and other elements of trade as retribution. As an example, we can easily produce cooking oil ourselves. We don't need to purchase from China, which, I mean, it's true, and actually this is one of like several different sticking points that there has been and not been much movement on. Most of middle America supported Trump for presidency. And I actually know, and I'm friends with a guy that's a farmer that plants corn and soybeans up in Nebraska. And this is a huge market for them. The Chinese market was, of course, the biggest buyer, I believe, of soybeans. It used to be. I think it's still, well, not right now, obviously. And there's been literally no movement. And it's not because China couldn't use the soybeans. It's not because we haven't grown enough. It's just because all this tariff noise. And so this has been one of the several sticking points. Now, my concern is with BMNR, they may not have loaded up on the right asset. Maybe they should have loaded up on soybean shorts, like for future. No, I'm just kidding.
Yeah. Yeah, we're all cooked.
Yes.
Yeah, clearly, soybean disruption on the macroeconomic lens affects an Ethereum treasury company. If you guys don't see that clear correlation there, I don't know what you're doing in the markets here. It's maybe this is not the game for you.
Yeah, it's wild what can move the market. And then this is another one of those sticking points as well. There's several of them between China and the U.S. So Shai did a good job of outlining this. And of course, what the U.S. and what U.S. companies are doing about rare earths specifically. 60% of the world's rare earths. Should actually read discovered world's rare earth. There's going to be more out there. It hasn't been found. It needs to be found. And handles 90% of the processing. So if relations do fall apart, that's certainly not a great thing between the U.S. or China. It's not good for either. But this is one of those areas where it could hurt the United States in manufacturing over here. In some cases, there are all alternatives, even if, one of the materials, and by the way, it's hard to see, but United States is actually number 2 for mine production for rare earth. So it's not like we do nothing. And some of these times it's just a material that's better and preferable for certain applications, but there are alternatives. And for some, there are no alternatives. One of the reasons why Donald Trump, when he was trying to get the Ukraine deal pushed through, was so forceful regarding United States rights or to the mineral rights for rare earth. So that's something that's on the docket as well. Oops, so that's a topic for a different time. So obviously, we're not out of the woods yet for tariffs and tariff noises. I think if anyone was singing that, they weren't paying attention in April. But did any of this surprise you, Tevis? And what are your thoughts overall as it relates to the build up towards that potential meeting between China and U.S.?
So I think a large part of it is posturing ahead of the meeting. Of course, they want to have a good negotiating position, so they're going to talk the talk. I found it really interesting that China, which is normally the adult in the room, like Trump will flip-flop through tweets and statements 10 times a day, no joke. And of course, there's all of this stuff going on in the background with people who know ahead of time who are trading around this and making a killing trading around this. I mean, I saw Chris Patel post around, when Trump dropped the soybean news. He was like, "Oh, I think Trump discovered 0-day to expiry options," and like it's become a meme at this point because of how quickly it'll flip flop. And then China is generally like, "Hey, we're committed to having talks. We're open to having talks." But then China came out and they were like, "Yeah, if you guys want a trade war, like we'll fight that to the end." And I thought that was really interesting response, whereby they were like, "Hey, we're happy to come to the table, happy to go to negotiate, but this is not really our fault. And if you guys want to have a trade war, then we can have a trade war." And that was the thing that gave me a little bit more pause, because I think you can expect this very mercurial nature from Trump, where he's shown this playbook in the past. And I even saw this tweet, which was saying, I think it's scarier if he threatens 30% tariffs than if he threatens like 130% tariffs, because that the 100% tariffs is just it's a starting point and it'll walk down itself. But I found it really concerning that China was like, "Okay, cool. Like, yeah, we could so I just think that just from a geopolitical perspective, there's going to come a point where these nations are going to come to standstill. And I think both parties are incentivized to make a deal. But, if we take 2 steps backward in order to go forward, then I think that is not outside of the realm of possibility. I think there could be much more pain ahead of that November 1st meeting, especially if somebody takes something seriously and they're like, "You know what, screw it, we're not going to meet." But at the same time, like I said on our show on Friday, I think Trump really cares about the market. I think he attributes a lot of his personal success to the market success. And as a result of that, I don't think he wants to rock the boat significantly, especially ahead of the midterm, going into the next year. So we'll see. I think everybody is hoping for it to result in some type of deal that gets done. It was kind of shocking that it just came out of the blue, and now we're just we're playing this game now. And last week this was not sort of on the docket, but at the same time, I think something like the market was getting to that place where it was just looking for reasons to sell off, and I think the sell off is healthy. It just depends on what happens, like how do we alleviate that uncertainty. Now, by that same token, Roy, I think if the SPY falls 0.5% in the last 1 hour of trading over soybeans, then I kind of think that's an inherent problem with where valuations are right now. I mean, I posted on X. I was like, "Hey, look, like if your gains evaporated as a result of soybeans, they weren't really your gains to begin with, right? Like it's just sort of this, you pour a beer and it's all the foam at the top. Like it looks full, but then it sort of just evaporates and there's nothing of substance there." So I think that's how I'm looking at a lot of these, the results of these rallies over the past couple of months, right? And I know a lot of them are fueled by AI, by blockchain, and all of these technologies that there's real anticipation there. But at the same time, like the level of leverage that we're seeing in the markets, which we saw over the weekend, especially in crypto, is the same reason why you're getting all the indices drop as a result of some stupid soybean news.
Yeah. Yeah, I think this will be a back and forth roller coaster until they actually do meet. Most likely they will meet, and then they'll kick the can down the road, and they'll say that it was a productive meeting. There is leverage and pressure on both sides. This is a much better position, though, for the United States than in April, where they were like, hey, let's have trade wars with everybody in the globe. That's like dumb. Obviously, it worked out okay, but here we are, and it's just China. Now, China on its own can be more isolated. Of course, the United States. I've talked about this before. I think you and I have as well on if there is an agreement between Russia and Ukraine. Now, I hope this doesn't happen, but the United States can put their hand on the scale a lot heavier on the Russia side and say, okay, we'll make sure you get an agreement with Ukraine that favors you. In return, you basically decouple from China, which they already don't like China. They're kind of like Italy and, well, it's not fair. Italy and Germany, I was going to say in World War II, but they don't really like each other that much at all. They're just, necessary partners at this point. But the United States can do that. And a lot of the energy supply that China has then is cut off. And then, of course, there's a certain strait where if there's some blockade or something, which would be really bad, that might cause China to do something like invade Taiwan. I hope that doesn't happen, but it well could be. And so that energy is also another one of those touch points for China, which is really difficult and challenging for them. And the other is, which is a little bit surprising on this, Tevis, is stablecoin. Yes, stablecoin in China. Have we talked about this before?
No. Yeah, throw this up, and then I'd like to respond to what you said.
So go ahead and respond first, and then we'll talk about this next.
Okay, so let me pull this down for just a second, and I'll throw it back up. Look, I think China. So first and foremost, I would say the market is much more warranted to react to this than to react to April, because I would much rather take, trade wars with 100 African nations than one China, right? I don't think anybody really gives a shit about a trade war with, the Congo or Zimbabwe or whatever. Like I care about China. That's the biggest trading, other trading nation in the world other than the US. So we are all globally incentivized as investors in equities for this to be alleviated so that we don't have any more volatility first. Second, with regards to escalation into something like an invasion of Taiwan, for example, I think if China really wanted to do that, they would have done that under Biden and probably had a better chance of getting away with it. I think that the posturing, whether like Trump's made a lot of bluffs, but I think he's done that in his 1 year since being president, because not many nations will have the balls to call him on his bluffs, because he can actually back up some of those bluffs. And like I think he emulates that stance where it's like, hey, I'm not messing around. So I don't think that China will want to take the gamble of escalation when Xi is like leader for life. Basically, he can just wait Trump out and then do it when the next guy comes in, and sort of gauge the temperament of the next guy, right? So I think that the Taiwan thing, it's just, sure, it could happen, but I don't think it's a calculated move. And I think China is very much a country of players who make a calculated move. So I think everybody's incentivized to make a deal happen. I think there's going to be a lot of posturing and he said, she said, but ultimately it's going to result in a deal, because that's what's game theory optimal for all parties involved.
Yeah, we'll have to see how it plays out. But I don't know. Like, there's leverage on both sides, and they both win. We both win more, United States and China, by having an agreement than not. And frankly, things are, even though you said president for life, that may not be true. There's indications. I don't want to go too much into the geopolitics stuff because I'm no expert there, but there's indications that he's perhaps a little bit weaker right now than he has been in a while. There's been a little bit more internal criticism, and things are not good economically for China as they have been in the past. And there's one of the pieces of weakness here is this: if you throw up the stablecoin bit, we normally don't think of crypto and stablecoin in China. Now, China infamously or famously tried to ban Bitcoin like 50 different times. It was funny as a holder, whenever they announced it, it's like, oh, it went down like 3%. It's like, well, great, thanks for the discount, because it's already banned. Like, are they going to ban it like twice or three times? And so they kind of shot themselves in the own foot. The United States, fair enough, at the time was very hostile to crypto, but not quite that hostile. What's really interesting is there's been a shift, of course, with Donald Trump and his administration towards crypto, and especially stablecoin, where for stablecoins, so this is the total stablecoin market, where we crossed 300 billion a week or a week and a half ago. Tevis, I'm just going to catch you off guard. What percent do you think of these stablecoins is backed by the U.S. dollar?
This is the total stablecoin market cap globally?
Yeah, 305 billion.
That's not a big number. 100%?
It's pretty close. So let's do this. We're going to go to fiat only. And
I mean, isn't it ultimately all backed by the US dollar because all other currencies are backed by the US dollar? Like turtles all the way down and leading to the US dollar?
Yeah, and I might actually be using the wrong. Okay, yeah, here we go. Let me do this. We'll clear fiat. And then we're going to clear this. Actually, we're going to toggle all, and I'll remove USD. That's what I'll do. And there we are. Total stablecoin market, not denominated, that it's backed by fiat, is $1 billion outside of the US dollar. So it rounds up to 100%. Now, this is really scary for China. And by the way, actually, most of this is A7, A5, which I wasn't familiar with this beyond I don't know, a week or a week and a half ago. This is backed by the ruble. Then we have euros, Brazilian dollars, and China basically doesn't exist in this at all. The scary thing, if we go back and we re-add US dollar here, this is just the fiat. There are backing types. It's still, for some reason, there's algorithmic. There's some that are backed by crypto, which makes sense because they're mostly Web3 applications. But this is something that perpetuates the United States global dollar dominance. Of course, we are the petrodollar, but this carries things. Most of the holders of the C stable coins are actually internationally anyway. And so, yeah, this is one of those things where China did not want to see this happen. It did not want to see the United States dollar just perpetuate its global dominance. And it really, 300 billion is a very small amount, but this is growing really rapidly. And as the United States has basically said, okay, we're embracing this instead of running away from it terrified, this is going to ramp dramatically over the next 5 to 10 years. And almost all of it will be backed by the United States dollar. So that's one of those things too, where, yeah, it's maybe not like as strong of a leverage as the midterm elections for Donald Trump and not nearest term, but it is one of those big factors. Now, I don't know what China can do about that necessarily, but hey, it's a good thing for us.
Yeah, dude, I don't know. I just started laughing when you were showing the remaining 1%, because if there's a currency that I don't want to be backed by, it's the freaking ruble. If you've been around in 2020, what was it, 2021? Yeah, you don't want to be backed by the ruble. And neither the Brazilian nor Argentine, none of these other currencies, it's just, where would you put your money if not backed by US dollars? I don't even want to be backed by Canadian dollars.
Euro would be okay-ish, but yeah, there's not, if you want to be backed by fiat, there's really not much of an alternative right now. BRICS is certainly not that alternative. The yuan is not that alternative. The yen is not. So we're seeing it. There's an appetite for global dollars or dollars on a global scale. Of course, this helps on the treasury side too, because most of these are backed by 3-month treasury. So just one of those supply-demand type things. And that's a scary thing for if you're an emerging power that wants, a piece of the action, wants to break up the petrodollar, because there's a lot of advantages we've had because we're basically the global reserve currency. You want a piece of that? That's going to be really tough for you because you've shot yourself in your own foot the way that you've dealt with crypto, and nobody wants anything to do with your currency.
Yep. So you do think this is going to be resolved on November 1st? You think they're going to meet in South Korea and you think they're going to resolve it? Or do you think more drama ahead?
More drama between now and then, for sure. It's Donald Trump and it's also China. We're going to get headlines probably every other day. And it's going to be, some are going to be really good, market rallies. Some are going to be really bad. This is really good for volatility sellers like us that are selling options. It's fantastic, in fact. But it can be very nauseous and tiresome for a lot of retailers Now, if this happens all the way through November 1st and we have volatility like that, some people will just say, you know what, I'm going to take more off the table and deleverage. And so we might actually see more of a, even though the roller coaster up and down, it might actually be a drawdown towards that, depending on how earnings do. Banks did amazing today, by the way, so that's really good for SoFi. But yeah, I do think on November 1st they'll meet. They'll say that it was productive and that they'll meet later.
Yeah, I don't disagree at all. It's going to be very interesting. I think TJ, who was in the chat, was saying, hey, look, if you're selling options, you got to be really comfortable in the strike prices you have if it's under a month out, because you might just get hit. And if it's over a month out, then, you enjoy that volatility.
Yeah, either way. If you're selling calls or selling puts, like that's the thing about volatility. It can get you either way. So, yeah, know what you're doing. And, we'll have to see. But we kind of have the playbook anyway from April 5th and Liberation Day and all that stuff. So we know how this, will happen over time. Now, a lot of unknowns, but overall, it just makes more sense that negotiations actually happen.
Yeah, and guys, we will be talking about PayPal and other topics. I am bookmarking your questions. We're going to be talking about the OpenAI CRM partnership, so definitely stay tuned. We are covering the questions at the end of the show, so go ahead and ask, and I'm bookmarking them. And Roy, what do you want to jump to next? So maybe let's dovetail this China conversation with this Bitcoin short whale, because that's somebody or a group of people who've been taking advantage of the situation, and then we can move on to some other things.
Yeah, absolutely.
Do you have it handy, or do you want me to pull it up?
You can pull it up.
Okay, hold on, I gotta find it. So basically, as a result of the biggest ever crypto liquidation event in history, which we had on Friday as a result of a whole bunch of people being over levered on Bitcoin, we did have some interesting, unusual whale activity in the form of an insider, a Bitcoin whale, who opened a massive short position like 30 minutes before Trump's announcement. Now, it's going to be really interesting. Yeah, I see Steve says Baron.
I mean,
it's going to be really interesting because I saw this post. I'm wondering, Roy, if you saw this.
So, yeah, I did. That's what I was looking for, actually. So,
okay. So it says new investigations into the hyper liquid whale who shorted the market just before Trump's tariff announcement allegedly point to the World Liberty Fi team for leaking the information. And I don't know if you noticed a couple of the last names here, but they might look a little bit familiar. So there was this investigation into the insider trading ring that essentially led to this massive short selling, this wallet that profited over a 20% drop in Bitcoin and then the bounce back on Sunday. And apparently, according to this post, there are some connections to the Trump administration. Luckily, however, the insider Bitcoin whale closed the short position earlier today. So, we'll see. But I mean, the thing with blockchain is that all the wallets are, like, you can see the activity of all the wallets. So you can see what this individual is doing. But yeah, Roy, what do you make of this?
Yeah, I hate it. The whole World Liberty Financial thing too. Like, if you look, like, if I went back to DeFi Llama, I have it pulled up. They're the sixth largest stablecoin, but they're largely just a balance sheet. They're nothing else. Nobody's using that coin for anything. I mean, not many. It's a little bit of volume. And this, I mean, it was already kind of sketchy enough back in January when the meme coins were launched. The Melania coin, which is down over 99%. The Trump coin, which isn't. But I'm like, I just don't like these things. If any are actually involved, I hope that they're prosecuted. I doubt that they will be under this administration, although they should be. This is just wrong. Like, insider trading of whatever type it is wrong. I don't want the SEC to go the route that it was under the Biden administration, where it was just had too strict of a hand, especially as it related to market participants. But these are sort of things that need to be weeded out in the market. We don't want, especially retail, especially new traders, to think that the game is rigged. And there it is, stacked in the favor of certain individuals. That doesn't mean everything in the market's rigged and you can't make money too. But man, if you're going to do insider things like this, do what Donald Trump did when he tweets and he says, hey, this might be a good time to buy the dip. Okay, fine. Everybody's got a chance then. But now this.
Yeah, it's not great. It's right part of it. Look at his shirt.
Liberty. Yeah, Liberty University. Yeah.
Very different.
That's where I'm getting my PhD, guys. So. That'd be hilarious.
Yeah, I mean, I don't know, man. It just seems like in this market that the insider trading is so much more out in the open with accounts like Unusual Whales and Quiver Quant that track the insider purchases of members of Congress and whatnot. It's so crazy to me how like prevalent it is where a sitting US president can launch his own meme coin and it can fall 99% with insiders dumping on like day one. And that's fine. It just seems like a grift to some degree. It loses credibility. I don't love it, especially because how can I say it? Like the frontier of crypto is something that like we're trying to cross that hurdle of regulation, sure, but also to encourage more broad adoption. And that doesn't happen if the guardians who are supposed to be policing bad actors are themselves encouraging bad actors.
Yeah, for sure. And we're not just seeing that, but we're also seeing things like in the predictions market, which is maybe what the next topic we should talk about, because I want to get your thoughts on Robinhood and predictions.
Let's jump into that right after, because I want to jump into this because it's super relevant. I don't know if you saw this. I shared this in our group chat. Somebody placed a massive bet on Grindr. And then half an hour later, news came out that they were exploring talks of going private at, I think, $15 a share or so. And this thing is trading for... I saw it yesterday when I shared this. Yeah, it's trading for $13 a share. So this is the thing that I'm saying. It's like it's 160% gain in half an hour. It's quite crazy. And like this is an account that I follow, Unusual Whales, and they always post stuff like this around insiders. So yeah, it was a bit. So I don't know. It's just I don't really have a horse in that race. If they go private, if they go public, I mean, I don't really care. But just the fact that you see the stock spike and somebody made massive amounts of money through options intraday, it's just like, okay, whatever,
Yeah.
Did you see the guy who won $500 on Powell coughing during his speech? This me of the WNBA things.
Yeah, that we won't go into that, but yes. So one thing that I saw that was really nice for Robinhood, I'm sure Kalshi is doing this too, and probably the others, which isn't this screenshot, that they actually, when I logged into the predictions market over the weekend, there's a disclaimer you basically have to fill out, much like it is when trading equities, that you're basically not an insider doing things with insider knowledge or manufacturing the outcome as well. If you are, you can be prosecuted for that. So what I wanted to get your opinion on here regarding Robinhood and predictions market is there was an interesting, and you're a Robinhood shareholder. People may not know this. Big time position, right?
Not really, but yeah, I am. I have enough shares to sell options.
Yeah. Well, a good way to put it. And if we continue to fall with Robinhood, maybe you'll become a bigger shareholder. But maybe JB McKinsey, who is in charge of basically international markets and also predictions markets for Robinhood, had an interview with Reuters where he said, we as a firm are going to be looking to see if there's an acquisition that's available. And I ran through like a list, but I won't go like deep into this, but I'll just mention Kalshi, of course, is who they partner with here in the United States. Kalshi launched international last week. So that would be interesting. They're valued at about $5 billion, and which is more than the cash that they have. They can tap into the debt market too, or authorize shares to sell. Polymarket, which is not in the United States, may have a hard time breaking in the United States, but they have massive internationally. Their valuation is actually at $8 billion. And if you look, of course, Kalshi has overtaken, I think I had that's here. Blue is Kalshi, which I wish they inverted the colors. But Kalshi has overtaken in terms of volume. Polymarket, 25 to 35% of this volume is from Robinhood as well. So Robinhood, at some point, like there's a scenario where if they don't do anything else, they just keep growing like they're growing, Robinhood's volume might actually pass Polymarket. Now, where Polymarket has the edge, of course, they're international. They're not the United States. And if you look at this is weekly share volume without sports, they dominate that market. Now, I don't know that Robinhood wants to go that direction, but they might. And these guys are already massively overseas. So maybe that would be the target. The only one that actually posts any amount of volume, and you can see this in the yellow here, beyond those two, which is very small, but it's growing rapidly, it's limitless. That's more of a short-term hourly and daily resolution prediction.
Can you click on the chart, Roy?
Yeah.
There you go.
It's more of a short-term. Yeah, like you can barely see the gold. And I don't know. So it's a much smaller player, don't have a good track on valuation there. And then there's several different startups. There's a bunch of, I just isolated two. The clearing company is one of those where it has a bunch of, BMNR, a bunch of guys from Kalshi and Polymarket that are on staff there. And so that would be, it's just a startup, tiny fundraising round, easy to buy out. Robinhood tends to do smaller acquisitions, maybe up to $200 million, usually not much more than that. And some very small ones as well. Myriad is another one that I actually think has a better UI than the clearing company, and actually than Limitless too. But it's also very small in terms of its market. So I'm not sure if that would really help them. So, of course, Robinhood also has the culture that they can build this internally too. So what are your thoughts, Tevis, on is this a good idea for them to go ahead and look to acquire somebody or should they build it internally? And if they do an acquisition, does it make more sense for them to just say, you know what, we'll take some of our pretty expensive shares off the market. We'll buy a Kalshi or a Polymarket.
Okay, so this is the order that I want to tackle these topics in because I want to shoehorn in the Polymarket MetaMask news real quick. So let's talk about Polymarket and Kalshi as one, and then I'll answer your question around Hood, and then we can pivot that to the Hood SoFi stuff. Does that sound good?
Yep.
So Polymarket, I don't know if you saw this, Roy, but Polymarket has also teamed up with MetaMask. MetaMask is, of course, a wallet on Ethereum. It's the world's leading crypto wallet, which, I mean, obviously very bullish, I guess, for Ethereum in general. And just the adoption there. Of course, we are both shareholders of Ethereum. I guess not shareholders, but we're both holders of Ethereum and shareholders of BMNR. And so it just seems like the predictions markets, there's news on a weekly basis around their adoption worldwide. As for Polymarket and Kalshi around Robinhood, what I think will happen there. I think Robinhood has a sweet deal with Kalshi right now from their partnership. I think that I'm not sure what the legal implications are for them to actually, from a regulatory perspective, to own one of them because they do offer other financial services as well. Like, I wonder if there are stipulations like there were with SoFi with regards to the bank charter, whereby one, like the bank charter limits SoFi's ability to offer, unregulated security or whatever else. Like, I wonder if there's any stipulation there whereby it says, hey, look, as a if you offer broker services or if you do have fiduciary responsibilities to your end consumers, you cannot actually legally own these gambling markets. I don't know that that's the case. I'm just thinking out loud here. But yeah, sure, there's higher margins if they own it themselves, but there's also more risk, more headache, more scrutiny. And so I think that the Kalshi partnership, it makes a lot of sense right now from that perspective. I think with Kalshi being in the US. That's really good. I saw this thing. It was Tom Brady in either Monday Night Football or Sunday, where he was just like he was on the desk on the panel, and he was using polymarket as a verb. And I forgot to bookmark it on my X to show it on this show. But he was basically like, "Oh, let's polymarket it." And the person who posted it on X was saying like, "Hey, once you get into that status of becoming like a verb, like, hey, let's Google it, let's Uber or these
Or Venmo.
or Venmo, yeah, sure, PayPal me or whatever the case may be."
Yeah.
Like that's like one of the indicators of, hey, you've made it. I think it's going to be really interesting, right? Because I think Polymarket is French. They're a French company, and then Kalshi is a US company, right?
Yeah, Kelsey's a US.
Yeah, and then,
Right.
and then like if Polymarket is not a US company, like I don't know how that might work. For them to have a more dominating US presence than Kalshi, especially if Kalshi has a partner in Robinhood that's promoting their stuff. So bullish on the market in general, like the sector. I saw this thing from Druck, and it was like, how does Druckenmiller pick the stocks that he's in? And it was like 50% of them is like, is the market as a whole going to be up or down? And then 30% is the sector going to be up or down? And then 20% is the stock within that sector going to be up or down? And I think the 30% is definitely there. It's an expanding market. There's secular tailwinds. There's worldwide adoption. There's high potential for innovation off of the blockchain and high levels of accessibility around the world. So 30% is there. Very bullish on events, trading platforms in general. I think they're going to absolutely dominate gambling markets. I think DraftKings, bearish on DraftKings, bearish on FanDuel. I'm a user of both, and I'm bearish on both. If I had a prediction market tool available in Canada, I would 10 times out of 10 times use that instead. And we've talked about that. As for Kalshi and Polymarket, who's going to be the winner? I think both are going to be winners, just to varying degrees. And I think Robinhood is going to be a boon to carry Kalshi through their massive network.
Yeah, it's clearly a partnership that's benefited both. And when they first launched it, of course, I still want it on a separate app. That'll never happen, I don't think, barring regulation forcing it at some point. But I mean, I knew monetarily like this would be a benefit. I didn't see it as quite this big opportunity. And I honestly don't think anybody did, even probably Kalshi. But yeah, it wouldn't bother me too much if they ended up going the route of Kalshi. The regulation is what kind of looms in the back of my mind, but they definitely do want to launch internationally. A lot of the markets that they're already in with the Robinhood wallet, which is a lot more widespread than where they're actually in as a equities opportunity, like in the UK, is something that they want to be in. And there's a lot of places like Europe that are more betting cultures, sadly, than they are investing cultures. So it's an easier layup to start there, if not start there, to go after that, and also with the crypto wallet and get people on board. And then when they expand, the brokerage side, it's a known name, just a known app and opportunity. So
I want to talk about Robinhood, but just some breaking news. I just saw this as I refreshed my feed because we were just talking about this. Grindr confirms buyout interest from top investors. Wall Street Journal reporting on this. Grindr is currently up about 3% after the bell. So the rumors were that they were going to get bought out around $15 a share, and they're currently at $13 a share. And if that is in fact true, there's also settlement times to take into account. This thing is going to pump from 13 to 1470, 1480 or something to that effect. But we'll see what happens after hours. This just came out.
Yep.
Anyways, back to Robinhood. Roy, so bullish on Robinhood x Kalshi on that partnership in general. Didn't Robinhood get into some hot water over the weekend, though, with the liquidations that were happening? I saw posts around processing times for a staking perspective for crypto. I saw posts around people being unable to buy certain things on the Robinhood platform all over again. I saw things around, I think TJ had a whole thing around like customer service on Robinhood that sort of blew up. Like his brother needed some customer service and they didn't have a number or anything like this. Did you hear about any of this?
Not the TJ piece. All the rest, yeah. A lot of that's a fundamental misunderstanding of, Robinhood gets all the flack. Part of it's the GameStop stuff. Part of it is they're such a massive presence on X, and they're also just massive in general. And the people most affected by any kind of downtime are traders, active traders, and that's a large part of the base of Robinhood. It's not a good thing, but it's also not just a Robinhood thing. I tried with Coinbase, I tried with Robinhood, and they both had the same issue where you could put in an order and it was immediately rejected. And so there was something on the back end, just like it was on Monday, which, typically if Robinhood's having issues, there's everybody else except for a few small guys are having issues. In this case, it was pretty much every single centralized platform. So, more than just Coinbase and Robinhood that had issues. The ones that were working were actually the, I can't think of the term. It's not DeFi. The exchanges, crypto exchanges, those seem to be working just fine without an issue. So it's probably some sort of data feed or API that they use all in common, or maybe a couple of them that were in common. Robinhood may have had a little bit more severe issues than others, just given what I've seen. I don't know that for sure, but yeah, even IBKR and everything had issues. So that's not great. Now the settlement time, or not settlement time, the staking time, that's nothing that Robinhood controls at all. For Solana, it's fine, it's quick, it's easy. Ethereum, just because the way that validators work, if you're onboarding as far as staking or you're offboarding as well, there's a massive queue. I've done a couple of posts on this. I think I even did a video on it. Let me actually pull validate. Okay. Yeah, I had to remember the website. This will provide some context in case people are wondering. The way it works with Ethereum is you can't, if you have a validator that's actually offboarding, and so this is when you're staking and you want to get out, there's entry and there's also exit. Sometimes there's massive demand for entry. A lot of this actually has to do with the yields on crypto lending specific to Ethereum. If we look at it over the last year, you can see there was an early spike here for onboarding. Now, this was a change in, I forget the update, it started with the P in Ethereum, that they ended up having a validator that could no longer be a validator because they didn't update the way that they were supposed to. And so what this does is create a massive queue for exit. And so if you look at just exit time, we are looking at 40 something days. If you want to unstake your Ethereum, it's going to take you that long. Now, that's not the normal time. The normal time is a day or two, but this is nothing that Robinhood can control. They don't control the Ethereum chain. Nobody does. And so like if you're staking and you don't understand this process, that's on you. The Robinhood is actually very clear when you stake. They say that it's unusual queue times. And so it could take between 8 to 60 days. Now, we can see the entry side of that. It's actually much quicker, although, wow, it spiked actually quite a bit here. That's interesting.
So this is the wait times essentially across the board, regardless of who you're doing it through.
Yeah. You can stake it yourself in your own wallet, and you're going to run into the exact same thing. It's an Ethereum thing, and of course, so the other thing too is, because not related to this, but there was a massive amount of volume during that liquidation event. And as a result, the gas prices spike ridiculously high. I saw somebody that said, so I posted like, hey, I tried like a little $10 transaction. It wasn't a real buy, just to see if it would go through. And they're like, hey, even if you wanted it to go through, this wouldn't. The gas price would have been higher than your buy, even above $50, even above like several $100s. And so what Robinhood also has to put in place, and I don't think that they did, I tagged them, and I'm sure that they'll update this, some point very soon, is in those high volatility events, they want to be up. They need to be up. This is how they make their money. It's not some grand conspiracy. It's like Walmart closing the doors for 2 days. Like, oh, Walmart wants us to starve. It's like, no. Obviously, something went wrong with them. They're in the business to take your money for you buying goods. So it makes no sense for them to be closed unless they absolutely have to be for whatever reason something went wrong. So regardless, they do need a notification system that's better there. They have it on the staking side. But if they were up this whole time, they would have also gotten flack too, even though it has nothing to do with them. It is on the Ethereum side of like, hey, this is very unusual volume, and as a result, the gas fees are incredibly high. Make sure you're okay with this. before you push the order button.
I think that's a great explanation.
Yeah. So yeah, that's basically what's going on. Is it's not Robinhood specific. I do, like, to be honest, I think maybe they had a worse issue than anybody else on the crypto side, at least from what I've seen. I could be wrong, but I'm a big Robinhood bull. I'm just gonna call it like I see it every time. But it was not isolated to them only.
Shall we move to the Robinhood SoFi stuff?
Yes.
I'm trying to get through the topics because I know we have a time limit, and we had 11 big topics. I think we're through maybe half of those, maybe 3/4. We have OpenAI and CRM to talk about. We have Amazon to talk about. We have some Tesla stuff. We have PayPal stuff to talk about. So let's jump into SoFi first. And yeah. So shall I share this post, my post?
Yeah, the Ken and Megan one.
Yeah. Okay, cool. So basically, Ken and Megan shared just this screen recording here around SoFi just aggressively trolling every single post that mentioned Robinhood. And this is the official SoFi account, by the way. So every post here that's mentioning Robinhood, you see SoFi responding to them with the same like canned message. It's clearly copy pasted. And so, I mean, this is interesting, right? Because in the retail investment community, we've sort of been chatting for a long time around this SoFi Robinhood, competition, and people have been comparing them from a product offering perspective. And I think the conclusion that we sort of came to was, hey, look, hold both and you're going to be happy. Yeah, I saw Noto reposted them as well. So,
I didn't catch that.
Yeah, kind of interesting, kind of aggressive. And then so I made this post, which leads us into this discussion. I said, first, I thought this was kind of funny. And then my second thought was like, oh, wow, SoFi is really getting competitive on the broker side of the business after they launched the level 1 options. And then as I thought deeply about it, I said, this is kind of like crash out levels of aggressive trolling. Like this is like a bad breakup type of, kind of like not healthy. And I said, I hope this prediction turns out to be totally wrong, but I wouldn't be surprised if we find out Robinhood has actually dropped SoFi's Galileo, because as we know, Galileo is servicing Robinhood. And in fact, I did go on the Galileo site and I think you'll notice what this is right here. This is on Galileo's own, website. If you go to the fintech page around who we serve, so Robinhood is clearly still there. I don't know if if that's actually the case or going to be the case for long. I mean, we saw the Derek White stuff, and now we're seeing SoFi troll Robinhood. Of course, this is complete speculation on my part. It's nothing that's warranted at all. It could be that they're just getting more aggressive around new user acquisition, and that's totally fine too. I just think that, I don't know, it's an interesting conversation.
What's really interesting, if you check, so you said Noto retweeted these things. Let me show you two things.
Yeah, Steve said that.
So here, you don't see any of them. Most recent post, August 12th, and then August 11th. And also, if you go to SoFi's official thing, it looks a little different than that feed that Ken and Megan put out there. Now, he captured it correctly.
Look at replies.
Oh, replies. Yeah, there's a couple of them still here, but some of them are missing. So here's one where they are retweeting. And so SoFi is actually in the topic, and then they left that there as well. There was another one I saw right here too. And maybe one or two right here. So by SoFi. So I think they've deleted all of their replies to when they were just like, even if SoFi is not mentioned, we're just going to go and troll Robinhood, which is really interesting to me. I think somebody with a more level head is like,
this is interesting.
Oh, that would be funny.
That would be. I didn't think about that. That'd be interesting.
I doubt it, but I mean, maybe. They do have they are launching their banking platform, so Derek White might be a good fit for that. We'll have to see. But It's interesting that they would post and then they're like, you know what, maybe this isn't the best look for it. And frankly, I don't think it is. I like the healthy level of competition between really it's more SoFi and Robinhood. Like from Robinhood's perspective, SoFi is a gnat at this point when it comes to brokerages. It just is. Um, are they a bank? Absolutely. They have a great banking product. I use them. They're my main bank. I'll probably use Robinhood as my secondary bank. We'll have to look and see what that looks like when it launches. Certainly, it won't be Wells Fargo anymore. But I don't really like seeing just like, hey, let's have our official channel basically dedicated to trolling Robinhood. That's an ugly look, guys, and it makes it look like you're frustrated, you're desperate. It looks like honestly, I think that there's merit to what you said of Galileo being dropped by Robinhood, because this looks like a jilted lover getting on Instagram and just posting all kinds of negative stuff that they can about their former boyfriend.
I wouldn't be surprised. I would not be surprised. It's interesting. I think clearly it's interesting because when the retail investment community was talking about Robinhood versus SoFi on X, it was like, come on, guys, like, let's not be petty. These are companies that, like, they're not looking at what each other is doing on a daily basis. And then, when Robinhood launches their City of Gold event, when they do the credit card events, like, the first response, at least in my feed, and it's very echo chambery, is that like, hey, what is SoFi doing? And then SoFi launches their credit card. SoFi launches, their brokerage improvements. And so it's a back and forth. And now you're seeing this very direct level of acknowledgement. I think it might also be in response to Robinhood when they introduced short selling in their presentation. The stock that they did the example on was SoFi stock, when they said, hey, like, let's short a stock here. This is going to be, and on the screen was SoFi. I don't know if that was deliberate, but
yes,
you see these petty exchanges.
I don't have insider knowledge of that, but I would say yes, it's deliberate. And it goes all the way back. They've been doing tit for tat. This was more than tit for tat. This was them basically declaring war and probably Robinhood yawning.
What would you do if it was reversed? It literally was. They were on a demo and they showed SoFi's app as they were demonstrating short selling.
But they didn't mention it. Like, it was just on there as like a funny Easter egg thing. Like, no big deal. Noto's response to it was fine. I love that, by the way. Good job, JDL. But honestly, like, if Robinhood app, which is their main channel that they use, if they started doing this, like, for all these SoFi like stuff, I would hate that so much as an investor, and I'd be troubled. I'd be like, okay, these guys seem desperate. There's something wrong with them. Now, SoFi, much smaller on the brokerage side. I'm not really concerned there. It's one of those where it's like it helps the flywheel a little bit. It's not a big part of SoFi's story. I don't think it ever will be. I could be wrong. Would love to be wrong as a shareholder. But SoFi, like, what they do, their main bread and butter, they do it incredibly well too. So still very differentiated companies. I'm glad that they deleted the post. I don't really like this so much. Like, instead of trolling, how about you release products that actually are disruptive and that take market share?
Well, it's interesting, right? Because, like, we see these posts, like, we see very fragmented and limited views as an outsider looking in. We're looking through the window. We can't really see what goes on in the other rooms. We can't really see, like, we can only see a very small sliver of what the actual story is. And we start to sort of form these conclusions around, like, hey, what does the life look like inside that household when we can only see a sliver through the window? And that might be very different from reality, because right now we're saying, oh, well, there's this competition and, both of them are competitors and they really care about what the other one is doing. But, like, in reality, this might just be, a community social media guy who is like, responding, or it might be a marketing department initiative from some mid-level manager who would say, hey guys, like, we need to acquire more members. I have this target for the quarter, like, chop, let's get on it. Or it could be a top-down level mandate around, like, hey, fuck Robinhood, and it could be like an actual beef internally where all the employees embody that way of life.
It couldn't be the former, because otherwise I don't think Noto would be retweeting that left and right. Sure. I didn't see it, but if Steve, what he said was accurate, it's not that. I think it's a beef and it's personal. And what it should motivate, and I see Baba said, Roy looking too much into it. We've been complaining for years, SoFi not being aggressive. Now they're being aggressive. This is the wrong kind of aggressive. Get aggressive with your tech team. Get aggressive with your engineering core. Get aggressive with the cadence of shipping out products. Get aggressive with shipping those at speed and scale and in excellence. That's what I want. Not like, hey, let's Now this doesn't mean that they're not doing that, by the way. So they could well be, and I think that they are. But that's what I want to see, not this kind of junk. Yeah, I would say, like, at Flappable Fog, post that next comment. This is a very confident CEO. The rhetoric, the way he's talking, the way that he's revealing some of those cards now instead of playing them so close to the vest, they are absolutely going to smash earnings. And they can see, I mean, immense tailwinds for the business. TJ posted something about like Robinhood versus SoFi over the next, which doubles first from here. I would say SoFi. I own both companies. Robinhood's my larger holding. That doesn't mean I'm selling Robinhood. I'm certainly not doing that to buy more SoFi. I think that'd be a mistake here. Now, if SoFi fell to $6 a share and nothing changed with the business, yeah, I would be selling a lot of every position to buy a lot more SoFi. It might become 80% of my portfolio at that point. But, the reality is SoFi has tremendous tailwinds over the next few years. Robinhood is more cyclical. Crypto winter may hit that. It's not going to affect SoFi really at all. So,
yeah, I like Shirley's comment here. To be fair, duopoly keeps the conversation focused and not thinking about BlackRock and Schwab, the actual competitive players. And I think it's a fair point to say, hey, look, like, we're splitting hairs on the two most innovative or among the two most innovative players in the space of saying like, oh, Robinhood versus SoFi. And it's like, meanwhile, you have a whole graveyard of all these legacy financial institutions that are just bleeding users every single year.
Yeah.
Like it's fair to say both are going to be winners,
Yeah. Let's move on in the interest of time. Do we want to hit Amazon then as a final topic, or what you pick?
Amazon, just opportunity cost. I don't think I want to throw up that Jassy post, although it was pretty funny.
Yeah.
Yeah. Look, I think Amazon hasn't really done all that much this year. It's down year to date. It's opportunity cost, one of the worst performing Magnificent Seven. The company on an actual company basis is doing fine. It's just the stock is not. And we'll dovetail that into PayPal, but let's talk about Amazon first.
Yeah, I mean, I kind of see it as you do. Amazon's always been on the radar for me, and I've never bought it just because every single time I look at it and like, oh, it's attractive. There's always something that's more attractive and a better opportunity there. So, like, I don't hate it as a play. I think it's probably undervalued here. But, there are tariff disruptions too that do impact Amazon. That's a real impact. It's a real impact for PayPal as well with that U.S.-China corridor. So yeah, we'll have to keep an eye on it and see, but I don't think I'll be buying it at all. I would rather actually just add more to NVIDIA if I want to be having large cap exposure, or buy Google, honestly, at this point. So almost pretty much everything but Apple.
So just to be clear, you would much rather buy NVIDIA at current valuations, where it's trading right now at $180, versus buying Amazon at $214.
Yes. Yeah. NVIDIA is, for me, again, I don't think it's going to be my best performer in my portfolio. I think it's going to do very well and soundly beat the market over the next 5 to 10 years. Amazon should do better, and I think it will do better than the S&P 500. Not bearish at all. But I think almost all of the Mag 7, except for possibly Tesla, and then for sure Apple. Like, I think if I was going to rank them, I would say Amazon would be like my 5th favorite as far as outperformers. I'd pick 4 others, and I'd also Broadcom. Broadcom deserves
them at some point. We have ranked them at some point this year.
We have, yeah. So it's not bad though. Like, it's, if you're looking for something relatively safe that has massive scale. Like, the one thing though with Amazon, I don't understand. Well, so they've made several different pivots, and Amazon will do this. They'll announce that they're getting to a new product line or new venture, and whatever company that is in that space, we saw this with HIMS as well, is just like their share price dumps. And then usually, but they're not always, Amazon doesn't do much with it, or they don't do really that well. Or they even back out like really early. It's like, hey, just an announcement. Just kidding, guys. Where I've been really surprised by Amazon is when ChatGPT came out and we had this AI and moment. I was like, oh man, Apple and Amazon have easy layups just because of their physical products. Mm-hmm. Google too. But Amazon, I'm like, hey, people use Alexa. A lot of people use Alexa. In fact, type if you've been doing Alexa, or if you have Alexa at home.
Dude, stop saying it. You're gonna fucking trigger mine.
Okay, yeah. I just put one in my little office. So they've done so like almost nothing with it, and it's just shocking on the agentic commerce side or on their own website. Now there are some tools that they've done. There's some internal development, but like Alexa is the same Alexa. Siri is the same stupid idiotic Siri. Apple Intelligence is an oxymoron. It's like, what are you guys doing? Google, though, Google is actually leveraging it quite well. So yeah.
Well, I don't think you're giving Rufus enough credit. I don't know if you know about Rufus, but it's basically Amazon's internal AI that's giving you like tailored suggestions based on what you've previously purchased in the past, and that's something that's hyper personalized to every user. At least that's the idea. And that's really their play. It's not like they're going to launch an LLM where you can talk to it a la ChatGPT. It's more so that you have this like personalized shopper just for you that knows that you bought, this brand 3 years ago and that it goes well with this other thing. So I think that's an interesting play. We just have to see it actually, play out. But the interesting point, I think, is that when you're coming off of a year where Amazon hasn't really done anything, generally speaking, these magnificent 7 companies that are still growing fundamentally, that are still innovating, not Apple, that are still innovating, they'll have bounce back years. And they'll have years where they outperform. Like I think last year, Google finished up like 50% or something like this. And then this year again, it's like 30% or 25%. And so my point is that me and you and the rest of the retail investment crowd and people who watch these videos, it's like we're consistently trying to look for ways to beat the market. And some years we do and some years we don't. And I think we're not complaining this year because it's been a terrific year for the both of us. But at the same time, like if you want to simplify it to a point of like making it brain dead investing, you can just throw it all into Amazon next year and you'll be fine because they're going to bounce back. All of the Magnificent 7 have had moments to bounce back. Meta had it when they announced the metaverse. Nvidia had it. All of them, even Apple had it to some degree. Like Apple announced Apple Intelligence, they bounced 30%, and like they haven't done anything really since. But the point that Google launched Bard and it launched Black George Washington and it got shit on all over, and then look at where Google is now. So my point is like you can't really go wrong when these companies have such deep pockets and they're still innovating and they're still growing. So if you want to like completely brain dead form of investing, you can do that, and maybe you'll even beat the market on some years.
Yeah. Well, see, the other thing with Amazon too is I should have mentioned AWS is a big part of that story. It's a big part of the reason why they're growing, and it is the weakest of the 3. It just is. They don't have the software. Steve had that good point when we talked to him on Friday. I'm not bearish on AWS by any means, but it's one of the reasons why I think that the stock is dragging is that they see Amazon as perhaps falling a bit behind. They'll be fine, but I just see so many other more compelling plays out there. And the Trainium chips too. Like that's another one where it doesn't seem like they'll have much of a market for that outside of Amazon themselves. So, and I'm saying that as a guy that I think Air Test Systems probably does the burn-in test solution for the Trainium chips. So not ideal, but I'm going to call it like I see it.
Yeah, very fair. I am going to bookmark some of these questions and we'll cover them very shortly in the next 15 minutes or so. Roy, what left is there to cover?
Those are all the main things that I wanted to cover. I know you mentioned ChatGPT. I mean, it's always in the news. It's at the center of almost everything, almost too big to fail at this point, which I don't think it will fail. But there's an interesting post today by Sam Altman that indicated that they had taken some steps to basically change the way that the bot presented itself to help combat some issues with AI psychosis, or that's when somebody is really asking it for mental health stuff and it does a lousy job of in some respects. Like, it will absolutely affirm delusions that you have because it was like, oh yeah, you're going to be its buddy and everything. And that's really unhealthy. It is. So I'm glad that they took some steps internally to curate that. Now, it sounds like that they're going to be tweaking that again and making it so it's not as pulled back as it was before. Because a lot of people love the 4.0 experience. I've seen it, like ChatGPT, for whatever reason, has gotten a lot worse. I don't use it for mental health stuff. I did play around with it one time just because I was like, okay, is what people are saying actually real on the mental health concerns on it? I'm like, okay, yeah, I see it. But yeah, we'll have to see how they do.
Yeah, I saw this, that he was basically going to start offering like adult content, which is kind of funny. It's like, I kind of want to make a meme where it's like, hey, what you expected with artificial intelligence, and it's like utopia, and then what you've got, and it's just all this random porn. Like Grok is doing it with a companion, and then now Sam's like, hey, let's also go into that. And it's like, guys, like, what is the moral decay of society at this point?
Yeah, and sadly, like, robotics will have an edge of that too, which is just, I hate it, but it's kind of the way it is. So,
yeah. Yet another OpenAI deal with Salesforce. I didn't really have a chance to read into this, but another week, another deal. I'm just waiting for Nebius's turn to pump on the back of some news. It's just crazy, man. The entire market is now like a call option on OpenAI's future.
Yeah, I wouldn't say bearish, but I guess I'm moderately bearish on Salesforce. So whenever I see them doing something like that, I think it's just a nothing burger. Yeah, Benioff, I think, has lost the narrative.
Have you ever used it?
Oh yeah. When I worked at Liberty as well, is almost every single day I used CRM, and I used several other products as well, and it was never a pleasure. Absolutely never a pleasure. It was not a very good tool. But it's adequate, and their pricing structure is, from what I hear, I wasn't involved in that side of it, very obtuse, very difficult to actually understand clearly until you get the bill, and it's CRM and others as well. They're not the only ones that are complicit in this. Have created a modern. They failed to create modern enterprise architecture to the extent where you basically have a Frankenstein monster, which is a conglomeration of a bunch of different parts stuck together in a system where it just, if something is upgraded or something goes wrong, it all breaks and it all falls apart, and it's tough. Because I remember we'd have these times where we'd roll out an update and it would be like, oh, it's not going to affect anything, not going to do anything, just a minor update, and everything would crash. It wasn't all Salesforce's fault. Now, they've really mastered selling their product, even if it's not very good. They do that very well. It's in their name, Salesforce, and Benioff is a great salesperson. But the bottom line is, a lot of people went after AI very hard and found that not all AI projects and companies are created equal. And Salesforce is offering an agent force, for that matter. Yes, they're partnered with PayPal. Hope it works out, but it's not a very good offering from what I'm hearing. I've not used that product. It's a very thin, weak product. Or if you want it to actually be robust, the team that was in charge of that, I can't remember the name of this internal team for Salesforce. They had told a number of large customers, they're like, if you want to implement this, it's going to take a lot of work on your end, just because it's not just like flipping a switch. And Benioff was saying the opposite. And so he fired most of his team, repositioned some of them elsewhere, and then got massive pushback for that because they were absolutely right. And he had no idea. He's not an engineer. He has no idea how the product actually works. He's just a salesperson. And so he'll say all the right things. And then you can look at some of the treatment that he's had towards Palantir. Like, he is, I don't know. It just, the dude has lost the plot. He has lost his mind. I think that 2 months ago I would have said CRM is perfectly fine. they have a good enough product that they'll exist for a long time, and they'll acquire people that they need to acquire just to continue coasting. Benioff, in the way that he's acting recently, is very erratic, and it would have me concerned if I was an investor. I think that they're a lot weaker, and the product is a lot weaker than even I thought 2 months ago. So I am not excited by CRM at all.
Yeah, I mean, I think that's fair. I think, again, I think myself and yourself are in that class of investor where we're just more attracted to small caps in general because they just have more possibilities and there's higher levels of growth and more innovation. Salesforce's product, I mean, from using it, I'm like a Salesforce admin in companies that I've worked in, like setting up the funnels and whatnot. It's just such a bloated system. But the thing with the bloated system is like a lot of these companies, once they move over to Salesforce, it's such a difficult migration process to get them out of it that like Salesforce has got them as a customer forever, for better or worse, because just a massive amount of data that people house on Salesforce is insane. So anyways, neither here nor there.
Well, one last note on that is the switching costs from Salesforce used to be immense. As AI continues to get better and better, that switching costs will be reduced greatly. So I think that that's a huge bear case for Salesforce. Now, I wouldn't bet against them. I think it'll be a slow decline, but boy, they have issues.
Yeah, and interestingly, I mean, Salesforce was not even up today on the back. Not even OpenAI could pull Salesforce up today. So that's quite crazy. Anyways, let me throw up the last topic, and Roy, we'll spend maximum 10 minutes on this, okay? Because I know you have to go soon. Less than 10 minutes. I made this post. I said, is it finally time to get back into PayPal? If not yet, what's the buy signal? And I know Neil posted something around like, you know, all these people on X talking about the stock and the stock is not the company. And I agree with that. I don't really have any issues with the company fundamentally. I don't have bear cases to present. I think they're growing. What I'm asking is, when will the market start to give them some respect that they deserve as a company that's still growing?
Yeah, if I was forced to tell it a specific time, and it's just a guess, and I could be wrong, is that's going to be Q4 earnings in January. I think that Q3 will be good, but not good enough to change anything from the market's perspective. The only thing that's really there's two things missing for the stock price equation. There's just really one missing from the company wide, and it's that the top line revenue growth is slow. It went back up to 5%. Now Braintree headwinds, the reason why that growth is so slow. It should be close to double digits. They did have some one-time benefit stuff anyway. But anyway, Q3 will maybe be a little bit north of that, but it's really Q4 when that full Braintree headwind shifts. What's also happening in Q4, they announced that they're scaling buy now, pay later through a couple of different announcements, but one of those is that they are giving 5% cash back on buy now, pay later usage, which in essence means that is not going to translate to the bottom line for the holiday season as much as it will be top line revenue growth. Bottom line is already there, though, Tevis. Top line has been lacking, so that's going to really fuel them during a critical quarter on the top line. They've also announced some massive Venmo partnerships with the Big 10, Big 12. They're pushing out Venmo. And then in January, what's going to happen, Tevis, there's a lot of things happening. They're officially launching PayPal World, which is a much bigger deal than people expect here in the next month or two. Venmo will onboard into PayPal World. Now, the really interesting thing with that, I got some pushback on this from Yevgengis. He's an amazing fintech guy, much better in the space than I am. Dude's a genius. But, I mean, even geniuses have round cakes. And so I was sharing this post right here, if you don't mind putting this up, that Venmo's integration into PayPal World is a huge deal. Now, a couple of things happening. One is in this year, anywhere where there's a PayPal user, if you want to send money from Venmo to PayPal, you'll be able to do that very shortly. Next year, Venmo integrates into PayPal World. Now, why is it next year? It's because they're integrating UPI, they're integrating TinPay, they're integrating Mercado Pago, Urdu, and several others, probably Deepu World as well, into the PayPal wallet. And then they'll integrate Venmo after that formal launch as well. What this means is all of a sudden you can use Venmo anywhere in the globe, not just where PayPal is used, but also anywhere that any of these other massive wallets are, which gives a massive scale. Now, this for Venmo means that I think they're already better than Cash App. I did not say that 2 years ago. I actually thought Cash App was better. But this positions them much more strongly than Zelle and Cash App, which are domestic only. Now, Yevgengis had said, well, Cash App tried to go international and it failed. Well, Yevgengis didn't have this layup of this massive Venmo population, which, by the way, there's 92 million. This is a little bit dated. It's probably closer to 105, 110. But 61% of these were not already PayPal users. So this is not PayPal owns Venmo. This is not the exact same population that uses Venmo versus uses PayPal. It's a very different population set, surprisingly so. So it's a huge unlock for PayPal to say, okay, the product has gotten better. And you can do more things with it. You can buy in a lot more places. And also merchants are a lot more prone as a result to accept pay by Venmo too. So this is a massive driver in revenue in January. And then the last piece, which is I think a huge catalyst, is the ads. They've announced a number of advertising products. Of course, they have they have on-app products, wallet products. They have smart receipts. They have advanced offers. Those are nice. But they're also using their data to be able to launch massive partnerships with, the Amazons of the world or the Sephoras of the world and so forth. And then lastly, they announced a storefront ads, which is basically for the small and mid-sized business company. I think you and I maybe have talked about it, but that is a very differentiated product than what is out there. And I think they're positioned well. The nice thing is, like if PayPal was trading at $300, I'd be like, yeah, it's kind of baking in all of this into the equation. Here in the 60s, basically they're assuming that PayPal will stop growing completely and that no new product will work at all. And so Q3, again, I don't think it'll have enough there to actually change the market's mind and perception on PayPal. I could be wrong. Q4 is when a lot of stuff happens and fuels, between the Braintree headwind, between a lot of other stuff that they shipped out as well. And then with the guidance of the year that they do for all year, that is going to surprise, I think, a lot of people. And I think PayPal World is really showcasing that instead of a dysfunctional, heavily siloed company that kind of competes against itself, they suddenly have this very integrated experience, which, like we saw, there was somebody that said how great the experience was that UPI integrated with PayPal. So they were just like, okay, let me hop on to my PayPal wallet and send money to somebody I know on UPI. Boom, easy, done. And there's whys and everything in there, but it's a cohesive strategy. Which, like with the Venmo thing, it's an absolute layup. Now, is it going to work with all these other wallets and stuff? I think so, but like that's not proven out. But even if all it was is Venmo goes global, that's like easy money. Advertising under Dr. Mark Gaither, the guy that built Amazon advertising or helped build that and built Uber advertising. It's the same guy. They have an amazing talent pool. They have an incredible amount of data. That's a layup. Like these are not difficult things, but I think the market has to see that. And PayPal has done a very poor job of guiding the market on these are our expectations with what this product will actually do across PayPal's ecosystem. That has to change, and I think it will change in Q4 when they guide for the year.
Yeah, no, I think that's a very logical and rational argument, and I think on a company level, I buy that. I'm just not sure that the market will all of a sudden, now grow bullish on PayPal as a result of something that they do. I just wonder if it's going to be like something silly to put it on people's radars. Like if it crosses a key technical level, or it does a partnership with OpenAI or something like this that's more flashy and more sexy. And people are like, oh, wait, let me take another look at PayPal. Oh, actually, this is a promising business. Because I just think that like they've had successful announcement after successful announcement and very promising expansions around their offerings. And the market just flat out just doesn't care. And so I guess what I'm asking is, okay, from a company perspective, the guidance and the earnings and the initiatives lead you to believe that, hey, Q4 is really the time when you should be getting into PayPal. But that's only if the market actually recognizes A, and B, respects, like gives them the benefit of the doubt, let's say, on their promises and on their initiatives. And so far, it hasn't. And I know it's irrational for the market not to do that, but I mean, the market can stay irrational for a long time.
Yeah, and so some of it goes back to Dan Schulman and just ridiculous guidance, ridiculous vision. It was so bad, and I feel very bad for Verizon shareholders since he's the new CEO. But it is what it is, and so they're paying for that. What changes in quarter four is that top line revenue growth. I mean, it's not going to be like 30% or 20%. It may get back into like 10% range. It might be 8 or 9%. But that's acceleration at the same time as bottom level is accelerating. And so they put all those pieces together. Plus, you're seeing some of the new innovations actually working. And then the narrative changes. It's like, okay, PayPal is no longer a dinosaur. They're accelerating revenue in the top and bottom line. And new products are actually taking and claiming market share. And PayPal has put out clear checkpoints on this is what the expectations are for this year. That's a formula that excites the market. That's something that they can understand. This right now, and fair enough. Like I see what some bears are saying. They're like, PayPal is just a company that's really good at announcements, or even not that good. They got to put points on the board.
We will absolutely see. I did make a calendar reminder for myself on beginning of January to talk about PayPal again. And I think they report earnings at the end of January. So
at the same time as SoFi, every single time.
Honestly, man, it might be worth a little punt for me to just buy some leaps in January 2028 leaps and then just chill. Relative to the risk that I'm taking, I think the reward is well worth it if it's going to be a turnaround type of story. Anyways, okay, let's go into the questions. Roy has a hard stop in 10 minutes, so that's what we have. Steve, do you guys offer leveraged memberships? It seems like people like that 125x type of stuff lately. Both Roy and myself offer memberships. You can join by clicking the join button. It's right beside, like right at the bottom left of your video. Somewhere, actually, over here. I can't do it, but somewhere over there. And then you'll see some members only type of content. We try to post some stuff on weekends. CRM OpenAI partnership, we talked about that. Roy, I know you're into PayPal. Have you also gotten into PayPal options like selling calls or call vertical spreads? I've been thinking about it, but the price movement does not instill confidence.
I probably will do some vertical spreads later this year. I have some leaps that have bled and bled terribly, and so I might convert those over to spreads at some point. So I still think that they're going to an all-time high by 2030. Can't sell out options or can't buy options out all the way through that time. But yeah, I'll have some. I mostly have been just holding and buying shares. You can hold those theoretically forever. So
yeah. What date and strike is just one of your best SoFi calls at this point? I think I have $10 January 2026s that I bought for $2, and I think they're worth like 17 or something right now. So I have a bunch of those. I have a couple of 2027 January ones for $12, I think, and $15, and then I have $17 ones too.
I've sold all my 2026s a while ago. 2027s is all that I have for $10 strike. I've got a bunch of those.
I don't know when to sell my 2026s, honestly. I have like no time value left on them.
Yeah, usually you'll want to sell those at least 3 months before they expire. If they're deeply in the money, you don't really need to. So with those, are you planning to sell them, or are you planning to convert, or a combination?
Maybe a combination. I don't know. I've never converted though from option. I have to call my broker or something.
Can you do poor man covered calls?
No.
Oh, that's a bummer. Yeah, I was going to say you could do that for whatever strike you're happy at selling it around earnings, and that would be a decent play. But
yeah, TBD. I'll let you guys know what I end up doing. What's your doctorate in, Roy?
I have not shared that yet, so Tevis knows, but I might do that at once I get it finished up.
That's some members only content for you guys, so sign up.
Yeah, actually, yeah.
You guys hype up unregulated prediction markets and then get mad about insider trading and information advantages on crypto. Pick one. Not really.
You can already buy crypto and meme coins. Like predictions markets are really no different. So I I've said my piece about prediction markets, the good and the bad. I'm not universally in love with it. The revenue is great though. Insider trading and insider advantage are very different things.
You could do a sell to exercise strategy, sell some, and then exercise with the proceeds. That's a good suggestion, Josh. Thank you. I'll look into that. I mean, I think I have like 10 of these, so it's not like a lot.
No, just sell them then.
Yeah, I might just sell them. But it's in a tax advantage account, so that's also like a consideration. It's like I can just sell them tax free. Okay, regarding PayPal, do you think that we will have a nice revenue surprise due to strong Euro USD traded 7% higher compared to Q3 2024, and even a few percentages higher compared to Q1, Q2 2025? That's a very technical question.
Yes, but you have to also keep in mind PayPal does hedge against international currency, so the benefit will be there. They've hedged less, especially as the DXY stabilizes. But yeah, there's a benefit for sure.
Which goes to 5,000 sooner, ETH or gold? They're both at about 4,100, I think it is. So, Roy.
Yeah, 4176. I had to look up gold. Ethereum.
Yeah, I would say Ethereum too. Gold has been a dark horse pick, honestly. That might be a poll that I run. So stay tuned. I might run that right after this. Should SoFi investors be concerned that Anthony Noto's compensation package could put pressure on the stock price as performance targets are met and very large payouts are triggered? Look, I think you're going to have the first tranche. That's the $25 payout. That's going to be triggered very soon here, possibly in November. It's about 90 days, I think. And from there, TBD, man. Like if you're worried about that some dilution because management got paid out at $45, well, like stop and zoom out. You're at $45. It's significantly higher than where you are right now. So I don't think investors should be concerned. Will they be concerned? Yeah, I mean, like they're concerned over a whole bunch of stuff. So
yeah.
Anything to add?
I mean, like he also has 35 and 45 tranches. He wants to hit those, and you can see like whatever your takeaway is from that first segment we did on Robinhood and SoFi. This is a very confident Anthony Noto that we've not seen in a long time. So I'm not concerned.
Yeah, Noto. Steve says Noto isn't getting tranche 3 unless they roll it out to 2027. It's possible. It's possible. Although I think we've already paid for that as a result of their accounting method. So it's like it's already baked into the cake at this point.
Mm-hmm.
Hey, James, welcome. You're a little bit late, but welcome nonetheless. Thank you for being here. I know Amit is also streaming. I know Tanner is also streaming. And thanks for being here, guys. Really appreciate it. Okay, we covered that. When is Roy going to sell PayPal? When can't he wait anymore and say, F it?
Well, no, if they end up the internal targets or the targets and the measures that they put out, if they begin stumbling and missing these, that's when I'm like, this is more of a cost than an opportunity. So I'll begin to reduce my position or even get out entirely. And I'll let you guys know if we hit that point. A lot of people give up, and I think it's a huge mistake based on stock price action, which if that's the case, you would have gotten out of SoFi because it's too much of a cost, not an opportunity. You would have gotten out of Robinhood, too much cost, not opportunity. You would have gotten out of PayPal, not PayPal, Palantir. Too much cost, not opportunity.
Yeah, I don't know anybody who did
that.
Yeah. Yeah, so that's going to be okay. So basically, what you're saying is you're just going to let fundamentals dictate, which I think is the very fair thing to say.
As long as they're executing, I see no reason to get out of PayPal.
Are you guys buying VG? I am not, but I am buying the dip on Next. Roy, Next or VG? Any?
I mean, I'm looking a little bit at VG and also at although it's not a pure energy play. There's the rare earth stuff too as well. But I want some energy exposure. I just haven't figured out. Also in phase. I wasn't in phase before, but I don't know. If I had to pick one, it would probably be VG at this point. But I'm not anywhere close to being a buyer yet. I'll probably wait until next year, do some research. Now, normally I do the invest and investigate, but here it's not just an individual ticker; it's more of a sector. So I'm not going to pick a horse yet.
Yep, makes sense. I think the horse that I'm picking is next because it's depressed at this point and it has some tailwinds going into the next couple of years. No pun intended. I'm not buying it like at massive amounts. Granted, I do have a large amount of cash secured puts, but I'm rolling those. I still have a position. It's like 1,300 shares or something. Okay. Do you think SoFi is doing both banking as a service and providing banking themselves? Fintechs would not want to use banking as a service from a competitor. It's like Amazon competing on its marketplace. I mean, you do have competitors using banking as a service. From they're using Galileo services, right?
Yeah, we do have some of that. Maybe there is something to this. I don't think that's the only reason why they've underperformed, because if you look at Marqeta, which is a competitor, it's been terrible. Now they've had some acceleration recently. There's several other banking as a service plays. One of those is Coastal Community, which Robinhood and several others is using too. But and that's doing quite well for them. But yeah, it's just a space that, for a variety of factors, saw very little growth. So is there something to what you said, Eggs and Taco? Probably a little bit, but I don't think that's like even much of the reason. Maybe 5%.
And by the way, Eggs and Taco, I think this is also one of the reasons why it's difficult for Galileo to talk about their client list, is because of this exact thing that you're saying. Is like the banks that are leveraging Galileo don't want to advertise that they're leveraging from a competitor company, and so they have NDAs whereby they can just get the infrastructure but also not advertise it. Roy, I know you have to go. Maybe really quick, 2 more minutes.
We can do a couple more questions. Yeah.
Why don't you be here at 9 a.m. to look at companies while the market over? Yeah, I don't think we do market opens because we both have full-time jobs, unlike a bunch of the people who do market opens because YouTube is your job, right?
Yeah.
How do you guys feel about copper with all the energy and data center build up for a long-term play? Google says 27 tons of copper is used per megawatt.
It's interesting. I would need to look into that.
Yeah, I haven't looked into it, but I will now. Thank you, Kip. Any thoughts on Solana? Look, I think. Yeah, go ahead.
Okay, yeah, I like it. I own some of it. I don't like it nearly as much as Ethereum. I think that's a big winner. Solana is more centralized than I would like. It doesn't have the massive impact of the massive increase in gas fees, so there will be some stuff built on it. There's a decent amount of stablecoin usage, but it's still so much smaller than Ethereum. Ethereum is a clear winner in my mind, but I do have some Solana. And I really only own 3 cryptos: Bitcoin, Solana, and Ethereum. So bullish, but not like crazy bullish.
Yeah, I like Solana because I used Solana because the gas fees were significantly cheaper than Ethereum. So it was like a poor man's like utility layer to blockchain. When I started playing around, I made a bunch of money on Solana because it appreciated in value. But then I think like last month, I also talked about this on a previous Bootleg Weekly. I just sold all of my Solana and bought Ethereum. And I think the rationale for that, while I am bullish on Solana, the rationale is because if institutions are choosing Ethereum as their blockchain of choice, then I want to have more exposure there. And sure, you might have winners in both Solana and Ethereum from an institutional adoption perspective. But if the one is like, if Ethereum is going to suck up all the dollars from from Wall Street and others, then I think we're seeing in real time who Wall Street thinks the winner will be. I think we'll see a nice margin and revenue push in Q3. Europe uses PayPal branded checkout a lot. And you have this massive weakness in dollar. PayPal should benefit from that. Did I miss something?
No, that's true, but they do hedge. So all the gains in the conversion rate are not going to be there. It's just they hedge.
Yeah,
but it's still big. It's not small. Yeah, pull this last question up, and then I have a chart that goes along with it. The Turkstein question.
Which question is this?
The last one that's in the start queue. Turkstein, 723.
Yeah. Do you believe more digital asset treasuries will come along, or will BM&R run take it all?
Here is, if it loads, all digital asset treasury companies, all of them, not just on Ethereum. And if you look at it, there's only really two. Now there's a huge list here, and this list will increase over time. But the way that this play works, the digital asset treasuries, is they tend to aggregate into just one big player that represents that space. Probably will happen also for Solana, although I don't think that's quite as an interesting digital asset treasury play. Now, can SBET break out here and get back in and make it a duopoly? Or is something like BT, which is kind of leveraged in both, can it make some inroads? Maybe. But yeah, for the most part, I think that there'll be a lot of little players and little guys and little fish, and then a couple of big ones. I mean, like even here, aggregated market cap, it's a little bit skewed towards just two. No matter how you look at it, crypto treasuries market cap right there, BMNR. So,
last question before Roy goes. It's more of a housekeeping question. Are you guys going to do calls for SoFi earnings? This could mean call options, in which case, no. This could also mean, are we streaming during the earnings call on the 28th? And the answer is yes. That's going to be pre-market on the 28th. Roy, are you buying any call options going into earnings?
No, I don't buy for earnings on anything. Now, predictions market, Polymarket actually has some interesting products that they'll allow you to, which is not in the United States, I can't use it, bet on EPS figures to see if they'll be over or under. And SoFi would be like the easiest bet ever, even if you're making like 8 or 10%, it's like they always beat EPS. Like, come on. Well, no. But yeah, we'll have to see. I hate that PayPal and SoFi always report at the same time. Last time I knew SoFi was going to be ridiculously good, and I figured PayPal was just going to be decent. It's better than expected. Good solid earnings, terrible stock price action. I felt like the need to be over there for PayPal. This time, so I think Q4 earnings, I have to do PayPal. So I think this time I'm going to do SoFi with the guys. But I've not made that a formal decision yet, just most likely, and Tevis wants me to, so I do what Tevis says.
Hey, man, look, you said it yourself. Q4 for PayPal is going to be more important. So you do this one for SoFi, and then in January, you go back to PayPal.
Yeah, I think so.
The only option play that I have, well, I have the Leaps, but the only option play that I have short dated for SoFi is I sold a whole bunch of cash secured puts for $27 strike price for the 31st of October. The break-even price on those is $25 a share. And I think that SoFi, barring this turbulence in a couple of weeks, is going to be, closer to 30 than it is to 25. And so I think that those are going to be like, I'll be able to close those for a healthy profit even before earnings. But I'm comfortable to hold those even after earnings because I'll be buying more SoFi at $25 a share. And as Roy alluded to, management is very, very confident around this earnings. And that's very evident in what they're posting online. I see more questions. We do have to wrap it up, unfortunately. And I just wanted to thank everybody for being here. Really means a lot that you would choose our little stream over anything else that you could be doing with your life right now. And we will see you next week on the Bootleg Weekly podcast at 6 p.m. on Tuesday. So definitely make sure to join on mine and Roy's channel. You can also consider becoming a member for more content. And yeah, other than that, reach out to us on X. We love you. Okay, bye now.
Later, guys.